What did you think about the last 24 hours?
Hey, Nicole, thanks for having me back on. Happy New Year. First time in January, so good to see you again. So what happened yesterday, obviously, was a huge disruption for the markets. But I don't think it's really about DeepSeek. This is something that you and I have been talking about for several months now. And I think the bigger story here is the expansion of AI workloads, and that's training and inference from the cloud to the edge. And what we're seeing is essentially a confluence of two things. One, the models are becoming much more efficient, which means that it's a lot faster to train the models. And it also requires a lot less computational power, less energy, less water, all of these resources that we normally assign to big, heavy AI training workloads. So that's because of these efficiency improvements, we're seeing less and less need for this. And then the other thing is the chips are also becoming much more efficient, which is kind of like the idea behind Nvidia's Blackwell. They're much better chips. They're a little bit still expensive on the upfront, but on the back end, in terms of the operational costs, you're getting a lot more ROI because these chips can perform a lot better. So better software, better training, more efficient models, and also more efficient chips. And what DeepSeek has done essentially is sort of shown the possibility of what can be done with this. So I don't know that we'll even be speaking or talking about DeepSeek 6 months from now, but we will be talking about this broader theme of the efficiency, the improving efficiency of models and chips, essentially being a sort of a much lower cost alternative to the way that we're thinking about AI training and even in infrastructure investments now.
If there is any doubt, a Chinese software application is not going to cause Nvidia to lose its market leadership. Actually, you have an opportunity to buy a lot of Nvidia and power grid companies due of Monday's deep plunge in the US stock market caused by DeepSeek. This was undoubtedly not the case on Monday, as investors expressed worry over allegations that DeepSeek, a Chinese artificial intelligence service, was both superior to OpenAI and significantly less expensive. All investors should be reminded that the stock market is essentially a crazy crowd at this time. The fact is that crowds don't think, they just respond. In actuality, IQ decreases with crowd size. Therefore, the stock market's furious reaction during Monday's sell-off was especially foolish, since investors were behaving strongly without thinking as strongly. The stock market appears to be regaining its clarity. The DeepSeek incident was referred to by President Donald Trump as a wake-up call for American businesses to reclaim their leadership in artificial intelligence. Because Silicon Valley will have the same degree of support from the Chinese Communist Party as Chinese enterprises, but in a capitalist setting, it is anticipated to prevail in the AI wars. Meanwhile, according to a Wall Street Journal article, DeepSeek asserts that its R1 and V3 models outperformed ChatGPT or came very close. Despite export restrictions put in place under the Biden administration to restrict the sale of Nvidia's cutting-edge AI chips, DeepSeek has succeeded. The entire plan for the development of AI is currently under scrutiny. Because of this, some investors are unsure if the energy-intensive and chip-hungry U.S. AI business will prevail in the AI race. Though details on the precise percent vary greatly, DeepSeek boasts that its AI search algorithms consume a lot less power than ChatGPT and other AI search engines. This implies that DeepSeek's regenerative AI is operating on a very different architecture than the one that Nvidia invented. There might be a more straightforward answer. We carefully consider which degrees of freedom to incorporate in our quantitative models in order to prevent the inclusion of uncorrelated data. Factors 1, 2, and 3 provide significantly more information than factors 6, 7, and 8 when attempting to identify a vital path to discovery. I believe DeepSeek is avoiding using power on uncorrelated data and restricting the degrees of freedom in order to streamline their AI searches. Though clever and evocative of the British deciphering German codes during World War II, this tactic may be repeated and enhanced without requiring a complete overhaul of the AI architecture currently used by American businesses. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I was reading about the founder, the 40-year-old founder in China of DeepSeek, and throughout, what he's been doing. But it was cited that he had said at some point the models were trained on fewer than 10,000 Nvidia A100 GPUs. And so the question is, we've seen pushback from Elon Musk and others. Then I read today that they weren't using Nvidia chips, but you talk about training and you talk about inference. Is there any way to know whether or not Nvidia helped to make DeepSeek? Because that could help Nvidia too, right? I mean, that could mean more demand for Nvidia. And I know that we're going to get to how maybe we're not looking at this the right way, but just that little fun fact, important fact. Do you know anything about that?
Well, no, not yet. And I don't want to speculate about which chips were used. It's kind of not really relevant. It'll be interesting if it's NVIDIA chips or not. Maybe it's a mix of NVIDIA chips and other chips. They're not the only player in town. But I think what's interesting is it is a proof point for the increasing efficiency of the models themselves and the increased efficiency of the chips themselves. And NVIDIA there, ironically, is you're showing some of the losses yesterday. NVIDIA is really well positioned to take advantage of these more efficient models. And I think that if we reset the conversation back, if we go back before yesterday's announcements and sell-off, and we go back before the previous week, so last week's announcement of the Stargate infrastructure investment project, and go back to what Jensen was saying at CES about what NVIDIA was working on and what the product roadmap was and the revenue roadmap, I think that's still on target. Nothing has changed. It's just we raised our expectations last week with Stargate in terms of investments, and then DeepSeek basically just pulled the rug out from under that, saying, no, you don't need to invest that much. But fundamentally, what NVIDIA was saying 2 weeks ago is still true. You still have this expansion of AI training and inference. You have this expansion of it in the cloud and at the edge and to endpoints. And so we're entering into a more hybrid AI training and workload model that still benefits NVIDIA. It's just, last week's numbers, I think, were a little bit inflated.
Alphabet, Meta Platforms, Microsoft, OpenAI, and other AI search companies are now investigating DeepSeek's capabilities and those of their own AI search engines. Few developments are more inspiring to Silicon Valley than a wake-up call. Therefore, I have little doubt that DeepSeek's success will not last even if it has a short-term AI advantage. Recall how cloud computing and the move to mobile computing both posed enormous, complicated obstacles, but are now commonplace and controlled by American tech firms. Those assisting in the expansion of the electricity infrastructure for new data centers were particularly severely struck on Monday following the DeepSeek revelation. As a result, companies like Eaton, Powell Industries, Argonne, Comfort Systems USA, Core Group, Power Solutions International, Vertiv Holdings, and Vistra Corporation are suddenly begging to be bought. It is extremely unlikely that DeepSeek will lower the demand for AI power. Furthermore, it is absurd to think that deliberate utility corporations will scrap their plans to boost grid capacity due to a Chinese software application. China may also be launching a propaganda effort to humiliate Silicon Valley and the Trump administration, as DeepSeek caused a market sell-off that momentarily established China's AI dominance versus Silicon Valley's. Recall that short selling, which is common in the United States, is prohibited in China. Due to potential Chinese propaganda, I would advise investors not to sell Nvidia and the businesses assisting in the expansion of the power grid if a new AI economic war breaks out. Remarkably, Nvidia did not take as much of a beating on Monday as the businesses assisting in the expansion of the electricity grid. This is actually a positive indication that Nvidia was showing some relative strength, and that the smart money was purchasing more of the company during its Monday decline. On pullbacks, astute investors buy up solid equities. Following the announcement of their next quarterly profits, Nvidia and businesses assisting in the electric grid expansion should see a 20% to 30% increase in value. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Hengler Investments, thank you both for being here with us right now. Let's talk about, Dan, the epicenter of all of this. And you've been a notable bull on many of these companies, many of the technologies that are at the center of the meltdown today. Does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Mm-hmm. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about 1/1000th of ultimately the build-out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir, you look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is one, when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
The revelation sent massive aftershocks through the tech equities on January 27th, causing major tech indices to plummet. Many specialists, however, hold a different view. After DeepSeek released its R1 model, which apparently outperforms top Western AI models like GPT-4, despite being produced with less resources, BofA brushed down worries about a decline in demand for AI semiconductors. BofA thinks this concern is exaggerated, even though the model's effectiveness might indicate a decreased need for expensive AI chips. The R1 model probably uses foundational models, such as Meta's Llama, which accounts for the majority of infrastructure expenditures. The increasing need for computing resources is demonstrated by Llama's parent company's intentions to raise 2025 capital expenditures by more than 56% to $65 billion. BofA anticipates that large-scale AI inference, derivative approaches, and foundational models will fuel rising computational demands. Additionally, Dan Ives, a Wedbush analyst, described it as a chance to purchase U.S. tech equities. Atif Malik, a Citi analyst, kept his buy recommendation on Nvidia on January 27th. He set a price objective of $175. The analyst talked about the issues brought up by DeepSeek's LLM, R1, which was said to have performed well for a fraction of the price of its American rivals. Although Malik saw the promise of DeepSeek's accomplishment, he questioned if it was possible to achieve its success without sophisticated GPUs, perhaps by use methods like distillation. Malik thinks American businesses still have an advantage because they have access to cutting-edge processors, even in the face of potential international competition. Additionally, he cited recent announcements of AI capital expenditures, like Stargate, as evidence of the ongoing need for state-of-the-art GPUs. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Retail investors, they took advantage of the dip, buying more than 550 million in shares. That's the largest amount on record going back to 2014, according to Vanda Research here. But the larger question, too, is off of yesterday's activity, how much of that, and the bounce that we're seeing a little bit here today, how much of that will hold? Are we in the dead cat bounce territory, or is this something that is more pronounced or prolonged? Now, everybody would be right to also look at a longer-term chart. Yesterday's decline included, but then also if you're looking at some of the moving averages, Nvidia broke through a 200-day moving average. The larger question that I have is, are we going to see, especially extended hours pre-market as we've gotten back above that 200-day moving average, is this a sustained move back above that, or is this the lead to what Ray Dalio is calling out in some of the early setup that is similar to what took place in the dot-com bubble?
Yeah, I think if history is a guide, it is a bit concerning, right? When you take a look at the past, to some of the larger sell-offs that we had, specifically with Nvidia, and going back to the last 8 times, it actually fell more than 17%. The next day, it only closed higher 3 of those times, so far less than half. So we could see potentially a bit of a reversal here as we do wait for the trading day to get underway, and then, of course, throughout the day. The one silver lining, though, I think for investors, and very much has been the focus, it's been in a lot of notes here this morning, is just the concentration of yesterday's sell-off. Yes, we did see a deep sea of red here when you take a look at many of those larger cap names, when you take a look specifically at the NASDAQ, with the NASDAQ closing off just about 3%. Obviously a bit worrisome here when you take a look at a name like Nvidia, given the size, the magnitude, how important it has been to the market's overall momentum here over the last several months, falling and falling so dramatically. But when you take a look, I say the S&P equal weight index, that was essentially unchanged yesterday. When you take a look at some of that price action, even beyond that, certainly a bit encouraging here. Majority of the S&P stocks actually ended the day higher. You had the advanced decline index, and that measures stocks rising minus those that are falling. That showed a positive reading of 199, even as that benchmark fell just about 1.5%. So again, that puts some of this selling into context. And yes, while there is reason to be concerned, and you see why some of the larger, well-known investors like a Ray Dalio are maybe drawing larger comparisons to what has happened in the past, I think it is a bit reassuring here for investors this morning that you can easily, I think, make the argument that the bull market is still very much intact.
Yeah.
Options traders' fervor for the chipmaker shares was unabated by Monday's big sell-off in AI darling Nvidia's shares. As the stock rebounded on Tuesday, traders were ready to pour back into bullish Nvidia contracts. Concerns about a low-cost Chinese artificial intelligence model that challenges the supremacy of U.S. competitors caused Nvidia's shares to plummet around 17%, or nearly $593 billion in market value on Monday. This is a historic one-day loss for any corporation. On Tuesday, the stock was up almost 7%. Options traders were already taking advantage of the sell-off to position themselves for a recovery, but investors who had become accustomed to the stock rising steadily were startled. According to Steve Sosnick, chief strategist at Interactive Brokers, it has undoubtedly been a speed bump for many, but it hasn't stopped activity. After falling to a more than 2-month low of 1.36 to 1 on Monday, call options, which are usually purchased to indicate a bullish opinion on a stock, outnumbered put options 1.6 to 1 on Tuesday, which is almost in line with the one-year average. We've witnessed amazing dip buying, Sosnick stated. According to Trade Alert data, by 1:30 p.m., around 5.4 million Nvidia options contracts had changed hands, which is almost double the typical rate. In the days preceding the sell-off, options traders had become exceedingly optimistic about Nvidia and AI technology in general. This optimism was bolstered by President Donald Trump's promise last week that the private sector would be investing heavily in the construction of additional AI data centers. Much of the volatility was caused by positional excess, according to Brent Kochuba, creator of the options research firm Spot Gamma. Having said that, Kochuba claimed that Nvidia options trading was far more balanced and two-way.